What's going on, traders? Hope everybody's having a great weekend. It is the end of September and now we are coming into October. Wow, how that flew by. And we're going to do some analysis here of the S&P 500, the Spider ETF, and look at some areas where we may want to engage the market, manage our risk. But of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So, with that being said, let's start off by looking at this week's major economic calendar, what to potentially pay attention to as we roll into the start of the week. So let's take a look at that here. Monday, October 2nd, we do have ISM manufacturing at 10 o'clock. We'll be paying attention to that. And we do have job openings on Tuesday. That's pretty much looks like the only thing on Tuesday the 3rd. And Wednesday looks pretty light. So ISM services 10 o'clock. Really no big market movers there. Maybe we'll keep an eye on PMI at 9:45. Thursday, though, we do have initial jobless claims at 8:30, so we will be watching that. And then Friday, we close out the week with the U.S. employment report, unemployment rate, both of those at 8:30, and consumer credit at 3 o'clock. So looks like a pretty light week as far as economic data, and that is great. All right, so looking at the monthly chart here, we're going to start off, of course, with the bigger time frame, and now that we are rolling into October, and what can we take away from a candlestick perspective here? Now, potentially, we have put in a type of a double top pattern here on the market, and we have still come in and made a lower low. Obviously, a full-bodied candle being printed here, and getting below last month's range. So overall, that is a little bit more bearish than bullish. And we do have a little bit of buyers coming in here at the end, but really not too much to take away as far as any real signs of strength. But overall, though, if we come in from the COVID lows, really, as we look at this, what really is potentially happening here is obviously we have our low here. Our low here, and potentially our low here. And we could even come down a little bit more on this potential monthly higher low, but we're going to be watching the back test, right? So we're almost there. We could even come down a little bit more, but we're going to really watch this back test zone of this kind of inverted head and shoulders pattern that we just broke out on, that gave us this nice rally that we experienced in summertime. So overall, structurally, this is just making sense from a pure price action perspective. We're just coming back now to retest this prior breakout, and from the monthly perspective, it could be really just setting us up for a retest. And then what do we get after that? Well, a move kind of in like this and then back up, right? And we've already kind of been hinting at and looking at that weekly time frame as also a potential kind of a cup and handle type setup going on right here like this. So this is also something that we want to pay attention of. Always the bigger picture can start to tell a different story than the daily or even the weekly time frame. So we just got to keep that in mind here. What could potentially be going on, just a structural retest of the prior breakout, and then potentially propelling us back up into the potentially back to these equal highs here towards the end of the year. But of course, there's going to be a lot of the damage that's going to needed to repair for the bulls to really push us up higher. The other thing that we will be watching at now, of course, we have this monthly candle. What else are we going to potentially watch for? That 50% retracement, right? If we do get some type of a counter trend rally, we'll be watching that. But it's not quite at 50% here, but also we can't deny the potentiality of just seeing price come up and retest either this August monthly low or even the July monthly low. Either of those could be a potentiality that we could see if we do see any type of a counter trend rally up into this area. And of course that may just set us up for a move that actually pushes us really down into this retest level. So although I would have liked to see a little bit better monthly candle be put in, this is what potentially we would be looking at, and that's gonna kind of bring us down into that 410, maybe 415 area that we've already kind of been discussing from this larger time frame perspective, right? So let's take a look at the weekly chart now and see if there's anything we can take away from that perspective, just on a just from the candlestick view. And I really would have liked, we do have, and let me zoom in here, we do have a nice kind of, it's almost a hammer, it's a little bit, I would have liked to see a little bit less of a top wick here. A little bit more selling pressure than I would have particularly liked to see, but we can't deny that there are some buyers there pushing up price as we were totally the sellers were totally unable to follow through and close at the bottom of the range. However, we did not close back within the prior week's range, and I think that that would have been a little bit more encouraging for me, especially we printed a red candle here and a bearish candle. If we had closed this with the green hammer up a little bit higher within the prior week's range, I would have felt a little bit better for the chances of seeing that counter trend rally. And if you really look at where we stopped when we did try to push up, where do we kind of come into? Basically those 14th lows and these lows right here. We basically just kind of came up and retested. Let me just delete this because I didn't draw it well. Hold on. But more or less you can see we had just basically come up, there we go, and retested the high here. And the fact that we were unable to close just above, even in this area, would have been slightly more of a bullish sign for me and giving me a little bit more hope in that potential counter trend rally. But that doesn't mean that it's still not potentially on the table. We'll still be watching the potentiality still, as I just went over on the monthly chart, but for that potential 50% retracement of the prior week's range. But I would have felt a little bit stronger on that potentiality if we did close this week's candle back inside of the prior week's range, and we did not do that. So a little bit more bearish to kind of a neutral stance on this one, but I really wish we would have closed above that, but unfortunately we did not. So when I go back to the that 410 area, though, let's just take a quick look at the volume profile chart here. And we kind of went over this a little bit in the prior video in the middle of the week, where, okay, this the weekly one is around that 415. Okay, so you can see that massive amount of volume being traded in that general area. But if I go back here, I think I have to change this to the 1 year. Or it might have been the daily. Okay, 408. So you can see, I mean, it's kind of, all within that that dollar range. All right, I think it's the daily. Sorry about that. Here, 410. Okay, well, that's a little bit lower, but that's actually, kind of goes back to what we were talking about also on the Wednesday video of coming back into this prior accumulation zone here that we had been watching, and that totally would make sense. So we'll pay attention to that. But either way, that kind of still lines up, and let's just throw it in here from that bigger perspective. This is that zone. that we were just looking at the on the daily, and that still pretty much lines us up. It's not going to be perfect. You're gonna, you have kind of a zone like this, right? It's not going to be to the T, but anywhere in this area from that 410, 415 zone, that we could come in, and again, just kind of create that potential bigger picture lower high, and set us up for a move like this, retest, and then we come back up. But we shall see, of course. All right. We obviously still are in our weekly downtrend, though, overall. No doubt about that. Closing clearly below the 9 and 20. Not below the 50 on the weekly yet. That's sitting at 423.15. So we'll be watching that weekly 50. We're not that far away from it. Just about $5. So that also kind of lines up close to that 20 area. So that 424.15, kind of basically that $10 range, all in this zone. All right, so what can we take away and look at from the daily candle perspective? Well, you can see pretty much overall we had just come up. What happened? We retested the daily 9 and we came back down lower. Now, I guess we can still kind of make that potential case that sure, we failed to make a new higher high, but you can make the potential argument. What are we seeing here? Right, high, and we'll have to look to see how the next few days, but let's see, I mean, is there a potentiality that we kind of hang out like this and maybe start to do something like this for a move, potentially back into, retest the daily 20 here around that 436 area? Well, that's definitely a possibility, but let's see. It's only going to matter if we start to get some daily closes and start to sweep the 29th high. So it's iffy. You can see here how really the sellers did come in when we came into that daily 9 there, and that's not particularly what you wanted to see. But we're going to look at everything from, all perspectives. I do like here on the daily Momo, though, we are starting to see a little uptick still in that momentum. So that's not bad from these oversold readings that we have been watching. That would be a little bit of a positive sign to me that we could start to make a little bit of that retracement. But still, we're really going to need to get back over these August lows, as we've been watching, and that would really be the first step that the bulls need to recapture. So and we haven't really quite got there yet, but if we start to trade up over that, then we've got that better chance to come up. If we broke up above, come back in, retested, and then we can make a move potentially there to come into the 20. But that might put us into the gap. So I'm still watching for that potentiality for that gap fill around that 436. If we get over that 436, look for that gap fill up to that 438, 45 area, 50. But that's only if we start to get back over that 434. So, all right, let's take a look at some other charts here. I think that's fine. Let's take a look at daily trends. Where does that have us overall here? Kind of closing in no man's land here between this bull pivot that we came back up, the saving grace so far, but unable really to close above the secondary bull pivot here. So that 429, that's definitely going to be important. If we start to get some closes over that, I feel a little bit more comfortable with the potentiality of seeing those moves a little bit higher, and potentially to come in and retest these lows again, and hopefully get over to potentially come up and start to fill that gap. But we shall see. All right, let's take a look at some other charts here, and what can we take away from those perspectives. Let's take a look at our daily trend and channel, where we ended up overall. Let's throw it out for a bit wider perspective. Okay, still trading in, and the one thing I do like here is what happened. Okay, we pushed up, and let me actually zoom in here because it's a little far away. what happened here? We had our kind of our dragonfly doji came up. We had our nice bullish day up, and then we had a move into the 9, which got pushed back down. But where did we close? Back inside of this channel overall, which I think is a good sign for the bulls, and we closed above this key trend line as well. So these are all I think positive signs from the bull case, that at least we have the potentiality to see a little bit more of a counter trend move, maybe up again. And we were talking about this in the last video, that we were going to look to see this 20 period moving average kind of start to drift into this midpoint of this downtrend channel here. So this is kind of giving me a little bit more hope that we could make that move into here, which could be setting us up for that longer term reshort back down into the trend line, right? So that's looking very interesting, and that's again, that's going to put us pretty much filling that gap up in that 438 area, and you know, the full gap fill is 438.50. So let's definitely keep an eye as we move into that zone potentially. I do like though that we did close back above this general zone here. I think that that is a little bit encouraging. All right. So let's look at some other charts, see what else we can take away. Nothing from this chart perspective. I think that's pretty much it I've got from the bigger pictures. All right. Oh, let's actually, I know what I was wanting to do. Let's go back into the monthly. Come into here. All right, so let's just take a quick look from the fibs from this perspective, from the October lows. Bring it up here. And what do we get? All right, so for the first time, that 428, again, important number for us to stay above. We closed below it, which I don't particularly like, but let's see if they can fight back on Monday. Recapturing that, that's going to be the monthly 9 EMA, right? But we are still above the 38.2 here at 416.84, coming again back into that kind of general area that we were talking about earlier, 415, 410. That zone, nice confluence with the monthly 20. If we do come into that area, really could set us up with a nice setup for a move in the other direction. These, of course, the bigger the time frame coming into a monthly 20, that's a huge area. And as it stands, nice confluence from a Fibonacci perspective. It also really could set up for a nice longer term setup there on this chart. But you know, we can really start talking about bearish. You know, it's obviously as some people have been. You know, once we start breaking under this 38.2 on a monthly, okay, then we can really start talking about real downward moves in the market, you know, potentially into the 400s. But until this, obviously, from this bigger perspective, still the 38.2, we're still above that last kind of bullish retracement. And of course, the 50 is kind of that neutral zone. But overall, I'll be keen to see what happens as we come into here, and really could set us up for something nice. But I do think that probably on Monday that we'll be able to see the bulls step back in and kind of push us and close us back over the monthly 9. All right, so and that's all I wanted to go over for this one. Let's take a look at some internals here and how we looked on Friday. We did open up kind of strong, faded down, close just below the 0, really on the ADD. Not too much to be concerned with, not really a super bearish reading. However, we really were not able to hold up in this strong area on Friday, up in the 1500, 2000. That would have been a little bit more sustainable. And the fact that we closed back below here, back below the 0 line, not completely bearish, not obviously as bad as earlier in the week, but just the fact that it was unable to kind of stay above the 0 line on Friday, I think would lean a little bit more to that bearish neutral case. And same thing with VOLD. a little bit more towards the bearish case, closing below zero, but really nothing too extreme, obviously, compared to Wednesday where we just got absolutely destroyed. But for me, this is really telling me there's really not too much participation or willingness of participation from any new money buyers in the market trying to prop this up at this time. So let's take a look at some other charts here with the VIX. See where we are standing from that perspective. We'll look at the daily chart first, of course, and then some VIX futures. Still just hanging out, right? We came right back into the middle part of our balance zone here. Perfect touch right around that 15. 75 area right at the daily 20, pushed back up, still kind of in this bullish to neutral zone, but we'll see if VIX just decides to hang out in this area. If we do, we could be kind of setting up in some type of a flag formation that gives us that final push up. So we'll see about that 1550, 1575 area. As long as we stay in here, I would say that that's bullish for VIX and put pressure on equity markets. All right, if we take a look at the VIX futures here, well, what do we have? Still stronger. We had come down, pushed up. Obviously, we're still not above the zero line yet, but overall, we are still uptrending here. So it's still pointing and suggesting towards more volatility in the markets. We are just below zero here, cooled off a little bit, but nothing really to report. And the one-day VIX still staying elevated, clearly above 12 and 15. So pretty strong here on the one day. So all of this is still telling me that potential further volatility is in the works for the markets. All right, so let's look at the dollar now really quickly, and then we'll take a look at TNX. All right, taking a look at the dollar, we did pull back just a little bit, and we were watching this potential double top, now almost triple top here, as we've kind of been hanging out. Dollar tried to come up higher, push back down, more or less flat. But even if we did sell down, now we're seeing a nice kind of confluence with the 20. Even if we came back and retested this key area, it's still overall, this was a major breakout. This is a major breakout. You could see we came back, closed, and still closed above it. But even if we sold back down into here, we could still just come up and make this move here. So really nothing going on in the dollar, but just kind of a bullish consolidation. Again, we could end up just kind of running sideways and creating another flag for a potential move up like this. And of course, that would put further pressure on equities as well. But as I was saying before, even if we traded back into the 105 area, that still is really just technically, count them off here. It's just low, higher, low, higher, low, higher, lower high, and we're just moving in a strong, solid uptrend. So nothing really too bearish. The only thing I will say is the rate of attack is very, very strong here. It's pretty steep, so could potentially we be making somewhat of an ascending wedge. Sure, you can certainly make that argument, but really doesn't mean anything unless we actually start to break. We actually start to break this uptrend line, and that has yet to be seen. So until we see this come back, retest, and then we start to come back down, it's really meaningless. So, all right, let's take a look at rates here. The TNX, and still just bullish, came back in, retested the daily 9, came back up, pushed up higher. So now we are still trading. You can see here we did a little look above and fail on this trend line as we came into it. Perfect, looked above, fail, but lo and behold, there was the daily 9. Boom, pushed us back up. But let's see if we start to really kind of create, maybe potentially start to try, if we looking at this swing high, what could we potentially be putting in? So let's see if we make a new lower low and we can actually start to see a new downtrend. But that's, maybe we've got a date with the 44, maybe with the 20. Let's just take a look at the weekly for fun. Well, weekly's not, you know, it's a nice seller there, really nice kind of push down. I don't mind that from that perspective. Monthlies probably look pretty funny. But definitely getting overbought. Very spicy here on our Momo. I mean, look at this. Boom, 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 monthly, green, green, green. And this kind of, I wonder if this is some type of a capitulation move, you know, the final blow off there for rates. Let's see where we are. Very, very hot. What were these readings up here? About 12. Seeing pretty extreme readings on the weekly. A cool down here would kind of make sense to me. So we can give 1 point for, you know, from this chart perspective, we can give one potential point for the bullish case. We'll always look at both sides, right? All right, so what else do we have here? Looked at the dollar, we looked at TNX. I think that's all of the things I wanted. We looked at VIX. All right, let's get back into SPY really quickly. And I think those are all the bigger picture charts that I wanted to go over. We went over the fibs. And all right, so let's get into some smaller time frames with our Fibonacci perspective. You know, I was posting about this on the on my Twitter. I believe it was on Thursday. Did have a nice 4-hour bull flag setting up here, and I was really upset. The move happened overnight. Beautiful breakout. I was really hoping we would hang out and do this during the Friday session. Really didn't get that. Broke over. Fake breakout, back down, boom, tried to really push us down. End of the month, end of quarter close. So it was very kind of volatile, as you can see, towards the end of the day there. Moves to the upside and downside. But really nice bull flag breakout. And again, I was upset that that happened kind of, you know, all pretty much in pre-market. We kind of came up into this value area. This value area low here and just really couldn't recapture that from that 4-hour perspective. Came up, couldn't get over. Would have been nice to see it close over this 38.2, but just was not there. But at least we can keep this swing low. Thing I don't like, and I really, in that monthly, remember we were looking at the monthly 9 EMA, where was that? 428. That's what I would have rathered us seeing us close over. We were talking about this in the last video, that 420, 427.50. We want to stay above that, close just right on it. Now we have the VOPC here from this 10-day hourly perspective right at 427. Sure, that can give us a little bit of support potentially, as all that volume's been traded in there. We may just hang out. Let's see, as long as we don't sweep really, you know, ideally we can hold 427 and get back above 428. Anywhere in this range, ideally, if we hang out, okay, maybe we've got some potentiality to make moves back under. But if we get under this, and certainly if we sweep these session lows, that's really going to be a change in theme for us, and then we would really potentially be looking at back down towards these swing lows of last week. Very, very bearish there. But you know, we tried to make that new higher high, and the fact that we came down and closed underneath this break of that head and inverted head and shoulders. Come on, or of that inverted head and shoulders, right? This was the neckline that I wanted to see us close over. That was what we were talking about. That was going to give us this breakout, which did give us this breakout. Now the fact that we closed right on it, it's just right at that line of no return, right? So we need to see it hold this for the bulls to potentially push us back up. So, you know, from here, we could potentially see that move, but let's see what happens. All right, let's get into some of our balance zones and see what we can take away from that perspective. Okay, so now we're hanging out. We were already talking about the 427, and you know, from our balance zone perspective here, we're gonna want to really hold on to the same numbers. We've kind of been over these. We really haven't gone too far here. Overall, these were kind of our upside targets earlier that we went over, on Wednesday. If we did break over that 429.50 area, we were looking for price to come up into that 432, 431.50. Perfect. Boom. Couldn't really make it, unfortunately. No follow through. And now we're going to see, we closed right on that line again, as I was saying. Last stop, 426, 427. This balance zone has to hold. If this breaks, then again, as I was saying, we're going to be looking back towards these lower prices into the 423, 422 area, maybe 424. I'll keep an eye on 424.85 as well, kind of a double bottom, kind of a potential double bottom zone in this area. But I'm still going to, keep an eye on that potentiality for us to make moves up higher prices. If we get over that 432, 433, and then over that, potentially come into that 435 area. And if we get any higher than that, at 435 to 436, that's going to put us in the gap. And that's going to potentially, if we get over 437, now we could get stuff there, but just from that daily chart that we were looking at earlier, over 436, the gap closes into that 438.50 area, and that's going to take us back into the top of this balance here. But I'm going to take it one level of time, one level at a time. I'm not sure that we'll be able to fill the entire gap. Maybe we only get halfway, and we come in and then see sellers come and push us back down into the 433 area. That's definitely a potentiality. But if we get over that 437, then yes, I'll look at that 438, possibly close to 439. At that point, though, the gap gets filled. Maybe it's time to start thinking about a short in that area for us to be pushed back down, back into the 435, maybe the 437 area. But I just want to take a look here, actually. Let's take a look at this from a weekly perspective really quickly. And I just wanted to get back. Okay, is this the week? Okay. The other thing is that I'm still going to be watching. We can take the fib off here. If we do get that counter trend rally, I'm still going to be watching. And again, this is only, come on. This is only if we start to break back below, right, where we met sellers last time. So this is only if we start to get back above into that 430 and get closes kind of back over that 433. But if we do end up filling the gap, and I'm going to go back to the daily, but the thing I want to point out too that we do have the potentiality of is still a potential retest of the double weekly inside bar, right? So if we do in fact get over this reload, I still would be watching to see if we could fill the gap. And again, this is a long shot, and I am from the weekly perspective, and the VIX is also showing us, the dollar is also showing us the more bearish case. The TNX, of course, was a little bit of a bullish case. So, but the fact that we did close below, that's why I'm kind of bearish neutral. The candle with the buying pressure, of course, makes me a little bit more neutral bearish because we did not recapture the 14th lows. But if we do, I still am going to watch for that potential back test of that weekly double inside bar. So that is also something that we want to be aware of. And if we did come into that area still bearish, and it could just really be also setting us up for another short opportunity. So we don't want to, be, even if we get with that counter trend rally, we still want to be cognizant of these bigger picture setups and where we're just really coming into retest as we, come up and maybe be coming into these really critical areas that could be setting us up with some really nice short trades for swings, to the downside. So we can't deny just, this, get all starry-eyed, even if we are having a counter trend rally. It is just that. And, until we really start breaking over, if we start to break back over and really into the upper part of last week's range or recapture, and we're hanging out back in the double bar, the double weekly bar from last range, and we're hanging out there, okay, we can start to talk a different, play a different tune. But even if we came all the way up to 440, even 441, 422, bigger picture, it's still bearish, and we could still potentially be setting us up for a bigger short. Again, I don't think that 415 or 410 is potentially out of the question. But from the bullish case, that's fine. We can come on. We can retest that this prior consolidation that we were looking at, and this possibly just set us up for a nice move, like that, as we kind of already been over. So yeah, I think I went over all the levels though on the balance zones and that I really wanted to go over. And let's just see, Mondays again, usually like my least favorite day to trade. It's a little hard to gauge kind of what the flavor, the tone of the week will be. Will it be a range week? Will we have any trend day, or what's going on? So I like to keep it a little bit, smaller on the size as we kind of, see what's going on. But those are the main levels. Let's see if we can hold that 427. 426. If we can, we'll still be a little bit more, hopefully for the bullish side, but we start getting below, and we'll look a little bit more bearish. If we do open up and we are still below this 427.50 area, and we're kind of consolidating, in this general area, I probably would consider that kind of a bear flag type of situation, and I would lean more towards a breakdown. If we were hanging out in the upper range, internals look good. All right, I probably would be looking a little bit more for moves back up into Friday's highs potentially, but we'll have to watch out there because we could just end up double topping and just end up coming in and then and then get pushed back down, as we've kind of seen, right? I mean, if we just kind of look at this wave kind of up, and then we could push back up, push back down, push back up, wave, this kind of motion, and this kind of motion wouldn't surprise me either, right? And just kind of topping us off here. So a lot of scenarios. All right, guys. Well, I hope you found this helpful. If you did, and you haven't already subscribed to the channel, would really appreciate if you did that. If this is your first time viewing and you're enjoying, come on and join us. Subscribe to the channel, smash that like button, make sure you've got that notification bell turned on, so that way you are alerted every time we update and post new videos about the market and trading. I hope you guys have a great Sunday, and we will see you Monday on the trading floor. All right, take care.